Yo, yo, yo. Hello, hello, hello. Yo, what up, Peacock? How was your week, man? Decent week? Hopefully it wasn't too choppy. Too choppy. Can y'all hear my audio okay? Hey, what up, Blademan? Alright, good. If you can't tell, I'm at a different location. I'm actually in the same house. I'm just on my laptop. What up, 4C? I think it's just me tonight. CT said in Discord earlier today, he was like, that he would be here. So I'm going to call him out. Yo, leaving me hanging on a Friday night to sit here and drink alone. That makes me an alcoholic, or a sweet tea-aholic, or a wateraholic. It makes me alone. It's just depressing for whenever you come here. Good evening. I'm glad you could make adjustments. That's like the key. Like, you're always going to get your face kicked in this industry. Like, it happens to me, it happens to everybody. But like, making adjustments and learning to make those adjustments over time seem to just be the key. Like, when you talk to people like Geronimo, who have been doing this forever, and other people that have just been like, who survive it, just being able to adjust and kind of, you know, shift with it and all is key to coming back and just staying consistent. I had like another flat green week. Like, it was a good week, but it wasn't anything to write home about. I guess technically, if you were looking at like a normal quote unquote job, it was a really good week. Like, at like your 40-hour a week jobs, it was like, dang, this was pretty good. But for like what we do and what I do, it's like, it was a decent week. I'm still in the middle of moving. Kind of prevents me from doing it a lot. My boys are sick today. I didn't get to trade the afternoon. I actually saw some good moves, measured moves and stuff that I would have liked to take in the queues, but it was just like, nope. Yo, gave your notice. Sweet. Yeah, I should have had you on tonight. I forgot to message you. I mean, technically, if you want to call me on Skype, I could actually get you added to this now. But, yo, you got to come on the show and talk. I'd like to hear perspective and talk, and I wouldn't say, like, I'd give you any advice that, you couldn't get anywhere, but for the sake... this is actually my couch. This is the upstairs living room. I'm usually in my basement. So I'm usually down in my basement, which is where my computer, my main trading station, and all that stuff is. My father-in-law is in town helping us move. Very grateful that he's here. So he's kind of been helping. And when I say move, I mean pack up the house, get ready to show it, to sell it. We're not moving yet, but we're like pretty much moving all of our stuff out. And so he's been here helping get stuff done. So he's sleeping down there. So I obviously can't do the show from there. So this is my living room. I actually don't mind this as a place to sit and, talk and chill. I'll have to do more of my shows from this location. So it's pretty chill. If you want to see my fun children's area, this is their little playpen. We call it baby jail, which is where we put them when we are sending them to jail. And it's not really baby jail, but you know, it stops them from getting out because they're tall enough to open the doors now. So I have to now get like door locks. So exciting. One of them is funny. You know, I've got twins, but it's hilarious because they're so different. One of them, if he's opening the door, you can be like, hey, you're like, hey, shut the door. And he'll legitimately shut the door. And he'll just look at you and be like, okay. And he'll just shut the door and walk away. The other one, you're like, shut the door. And he grabs it and like goes, like he tries to run and like go through the door and down the stairs or whatever. But they've kind of learned to like, you know, get off stuff safely and climb down the stairs safely and stuff like that. Yes, Jasper, Active Trader Pro is probably, I don't know, y'all answer, y'all throw in your comments here before. I think Active Trader Pro is like the best for options trading. I know E-Trade has some issues sometimes, but it's pretty decent. Other than that, I find Active Trader Pro for what we do, Jasper, like aggressive, sometimes high volume trading. I almost never have technical glitches with Fidelity. I very often have random like glitches with other platforms, so I stick with Fidelity. And that's why I have a video on it. That's why I have all that. What up, Jason? That's a nice room. I like the couch. Streaming from the laptop's a little different camera. I had to get a different camera and stuff, but I can't wait to move and get in the new house and set stuff up this June. Yeah. If you're free, Peacock, hit me up. Send me a DM. I'd love to talk to you about going full time. So it's not too many of us tonight. I don't have a particular topic, but let's talk about the week, guys. Let's chill. If you got any questions, I can rant some. We can go on something. You know, I can always talk about something specific if you have questions, whatever it is. I don't have my screen recording stuff here. We'll talk about that in a second. But, you know, usual disclaimer. I'm just a trader. This is just for entertainment purposes. I'm just talking through my stuff. Let's, let's get into it. Let's start a show. Let's have a good time. We'll hang out for a little bit, talk about our week, relax, unwind, have a drink, and, see where the night leads. Sorry, listening for my kids. I think I hear one of them upstairs making noise. One of them has been really sick. What up, John? So we've had to go and kind of take care of him. I'll have to probably hold him tonight once he starts getting fussy and stuff. It's kind of sad. He was really sick earlier. It was really sad. I hated having to, I was like holding him and he was just like falling asleep while I was holding him and like just kind of relaxed, and you could tell he just didn't feel good. Felt really bad, but he's okay. He's just got a little bit of a stomach bug, so he will survive. So is there anything you guys want to talk about? I can always go off on different things. We can always talk about something specific. Is there anything, y'all want to talk about? But first, cheers to all of you. Cheers to the week. Hope you traded well. Cheers to Peacock, actually. That's the real cheers. Cheers to Peacock going full-time as a day trader. That's kind of the goal here. Well, the goal is whatever you make it. But once people start doing this, I feel like they, and for those of you guys who are still working on kind of becoming full-time traders, isn't that kind of the goal? And kind of something that, people who just trade occasionally, like you're trying to get to that, I want to do this every single day. And for Peacock, big cheers to you, dude. It's amazing to be able to be at the point where you can be like, hey, I'm going full time doing this. I'm going to make a career out of it. It's just amazing, and it's great to be able to see other people that are in our chat room do that, and to get to that point. And I'm going to feel free to shoot some messages about anything you want me to talk about. I don't have my screen recordings from the week. Yeah, I think I could do that. I could probably set one up in Discord, asking how many like full-time traders we have. But I would be down with doing something like that to kind of see how many we have that are full-time versus part-time. It'll be interesting. Sorry, I'm just trying to move I've got all my screens in one place. So let's see, Chase, what you ask? Send me the time, Chase. So Chase is saying that he can't seem to get the Google strategy down. And he keeps entering exactly as he thinks I would explain it, and it goes against him most of the time. And could I go over the specific mechanics again and exhibit a good loss? So I actually took what I thought was a good loss today in Google and a good win in it. I'm not at my computer. I'll try to cut that over the weekend. I'm in the middle of, so for people who are wondering like, oh, you haven't put out much content, you didn't do a show on Wednesday, father-in-law's in town, like I said earlier, I'm in the middle of moving. I'm pretty much emptying my house out, in the middle of getting a new loan, selling this house, buying a new house, doing a ton of stuff, so I have very little free time. And I'm not even trading that much right now. I'm trading a few minutes a day. Like I trade 30 minutes to an hour a day. I might hop back on, but a lot of times if I'm in Discord or I'm there, I'm really doing other stuff. I'm tax stuff, trying to get certain things filed, all this other kind of stuff. So there's a lot going on behind the scenes. So I have very little time to make content now. After this month in March or after the next week or two, my free time will go up dramatically. So I'll have a lot more time to kind of finish some strategy videos that I've been working on, and finish a bunch of other stuff and do a lot more shows. So, do bear with me in this time of like, grave annoyance and uncertainty when it comes to the whole lack of content and stuff that I'm throwing here. I'm super excited, but it's just a ton. So, what do you mean, Chase? And I'm going to say something else, but what do you mean by good loss? And a lot of times if you're listening to Geronimo in the T3 live room, you can kind of time when he's talking about shorting or longing something up. But I don't know what you mean by good loss, because I have a very high hit rate for the Google strategy. And usually when I lose on it, it's not because it didn't work and I could not have won. It's because I didn't take the money and I was holding for a full stochastic move or a range move, which didn't happen. Let me see, 1004 Sufyan. And I called one out today, guys. I'm pretty sure I called one out today. So let's go to this. Let's go to my one chart and let's go to Google. I don't even know what this chart is. Don't pay any attention to this particular sign or stock. So Google. Now remember, I'm on a laptop now, so my stuff is not as good. I actually might not even have the stochastic set up on this. Let's see. So I don't even have my stochastic set up on this computer, Chase, and I'm sorry about that. I will get on this TC2000 and I will, do I have it on this one, stochastics? Ah, here we go. Let me look at this really quick. And this will be a more laid back show. I don't have anything. I want to talk to Peacock or guys going full time a little bit. But I don't have a ton of like specific stuff. I definitely want to talk about the week some. CT abandoned me. So were you going long or short? Were you going long right here? This is beautiful long, especially for a quick scalp. So let's go right here on the 1 minute chase. So I'm going to zoom in on this. Shift L. Alright, so here's what you're looking at in Google. So can y'all see this? Let me go to my Streamlab. I'm going to move me out of the way. So let me move me out of the way really quick. And then I'm going to answer Peacock's question after I do this. So let me do this. Okay, so here are 2 really good trades in Google Chase per your Discord question. If you guys ever want to ask questions, you can always do YouTube. If you want to talk to me elsewhere, you can always hop in Discord. Comment afterwards, and I can share a link. So you have Google going up here. Don't remember exactly what the market was doing, but hit the 200 and it failed. Look where the stochastics are at the top. If at this point we were calling a short in Google, you could have gone short here. This is the 1 minute stochastic. You could have gone short here. So it rolled over, it broke down. You could have taken a short here, and you might have got chopped around on this candle, but you would have been green in this trade if you took this candle and held it at a 200 breakdown. You would have been green. This is a, let's see, the low of this candle is 63 or 2663. The high of this one is 277, so that's over a 10-point move. You can definitely catch a little bit of money out of this Google trade here. For the long that whoever commented, if I go back and look, said, so now Google hit the 200, it bounced down and hit VWAP. This would be your next level of support, just in this particular case. It's like, well, the first time hitting VWAP after coming through VWAP is usually some type of support. Stochastics are at the bottom, it crosses up, and you buy a breakout, and there you go. Now if I look at a 2 minute chart, and let's just turn that to a 2 minute chart for the sake of, alright. Look where it hit VWAP. It's down at the bottom. It's probably more of a 1 minute trade than a 2 minute trade. You could have taken this short that I called out there. Like you had a 2 minute setup short too. When it hit the 1 minute 200, you could have caught that. Down here, this is more of a 1 minute play than a 2 minute play. A little bit more risky, but it does hit VWAP. That's support, depending on what the Qs were doing at this time. You know, there's your long. For a quick scalp, I wouldn't let the stochastics play out on that, but there's your quick scalp for a point or two. Qs, look what the Qs were doing. They were, looks like they were similar. Google might have been outperforming the Qs at that point. But yeah. So I'll do some more live trades next week in Google. And let me... $10.04. Yeah, $10.04. So, like just saying that you are having a hard time, I understand like that you're having a hard time. I get it. And I saw your other message, and I'll hit you up in a little bit. Like I said, I've had sick boys all day, throwing up. It was so sad, and all this other stuff. But I'll get back to you. And you know, if you're talking, send me entries, send me something. If I don't know when you're trying it and when you're not. Like I'm not buying it every time. It's like, you know, I might take 5 trades a day if I was sitting down all day, which right now I don't have the time to do. If I was sitting down all day, maybe I take 5 trades a day in Google. It's not like I'm taking it every time it hits these levels. With the stochastic strategy, it's just giving you that entry and that, like, let me look at this to get that extra conviction. If I'm only going to sit there and take tired 2 to 3 trades a day and really get some good trades, what am I looking for? And the stochastics really help you with that. And helps you get that entry point for when you would take it based on like a Q setup or something like that. So shoot me a message with your entries. I can look at them and be like, hey, I thought this was a good trade. The loss was just wrong. And kind of like that. I don't sit there and take them nonstop. Like there's specific times when I would take them just based off of, you know, the Qs hitting a shooting star reversal in either direction, or smashing into VWAP and then reversing, and different things like that. So Steve, or Peacock. So Steve asked in YouTube, and then I'll come back to Discord. How do you stop the yo-yo on your monthly P&L? And you're still having 5-figure red days, and you've noticed if you take less trades, you're steady profitable, and you realize that, and you really don't think right now that you can have those big days. Um, and you say you'd like to have a stop loss on the day, but struggling to obey it. If I did obey a daily stop loss, I'd have a 30. You'd have an extra 30,000, which is a ton of money. And I agree, that is a bunch of money. Um, this is a tough one because it's something I struggle with, honestly. I'm not a big fan in theory of them, but I'm a fan of them in this market, and I've been giving myself daily stop losses. And part of it is treating it like a business. Part of it, I do the daily stop losses. I force myself to size down early, which is hard to do, and I force myself to trade more intelligently um, early, so I don't actually get to the point where I'm having to get stopped out. Like if I normally would take 10 to 30 contracts early, maybe I'm taking 5 to 10 on a few good trades. And then if I get a breakdown or a breakup with follow through like we had early in Tesla today, I play it, I then go back to my normal size, or I just keep playing with that size. And especially when you get started, you're going to yo-yo, like you're going to have some losses. And in the show with Eddie, I said that, like, I told him when he was going full time, your losses are going to hurt more. So when you don't have that extra income, and this is all you can do, and you're probably looking at your best like days, you're like, man, I can, and you know what you can do, and you know what you're capable of. Knowing what you're capable of is great, and it's good to have that confidence. But you need to rely on solid fundamental trading and intelligent losses. And I'm not saying you have to incorporate a daily loss, but at some point, if you actually look at your business or your trading as a business, which is what it is, and you keep a 7-day rolling P&L, and you, over the time of creating discipline, and see, this is kind of what it is, isn't it? It's creating discipline. It's being like, hey, I'm a disciplined person. Oh, hang on, CT text me. CT is good for next week. I should tell him, yo, you can still come on, dude, if you're watching the show. Hit me up in the YouTube. So if you are, I lost my train of thought. If you treat it like a business instead of like just a money making, because now that you're a full-time trader, in a sense, you're there. You now have the dream job, right? You now have the ability to do what everybody out there, quote unquote, on the Instagrams and the everything else, Twitters and TikToks and stuff, want to be. You're that. You have the ability to be that. How do you continue to be that? How do you not blow up? How do you not stop? You treat it like a business. Yeah, James, well, here, I should be able to post it in chat. Message afterwards if this doesn't work. Oh, give me a second. Let me finish answering this. So, then I'll post it here in chat, and then message or comment after the show, and I'll post the link to the Discord. So, treat your trading like a business. It's not a money-making machine. You should, and it's to the best of your ability, you should make it to where you never have to make money on any particular day, but to where you're keeping your average and you're just keeping your money going forward. It's like that picture that we post when we talk about, hey, this is what we can make, this is what we can do. If we just get this little amount of money. If you don't want a 5-figure red day, put your stop at 5,000 and force yourself to trade in a way early to where you can't get down 5,000. And now, yes, maybe early on you're going to have less 5-figure green days, but who gives a crap if you're protecting yourself now that this is your only source of income? And protection, Peacock, is more important than the massive green days, because those green days are going to come and you're going to know when it's time to lean in. But if you set a 5,000, I'm just using this number 5,000 because you're saying you don't want 5-figure red days. Okay, let's cut that in half and let's say a $5,000 red day. And you force yourself to trade in a way. Maybe it's with 5 contracts or 10 contracts early. And don't get me wrong, like, trading with Tesla, you can catch a point or two early. So catching a point or two with 5 to 10 contracts is, $1,000 to $2,000. So you can make that money really quick, even trading really small contracts. So freaking respect it. Trade that small, intelligent, small trading early, quote unquote small. Get those wins in, protect your losses, so in a choppy market like it is now, you're not getting wrecked early, having to come back. You're just kind of trading small, waiting for the trend to develop, getting some smart trades in. Then before you know it, you're 2 or 3 grand up, and then you can maybe hit a few more trades. Now you're 5 grand up. Hey, you lose a little bit, 2,000. Hey, you're done, 3 grand on the day. That's still over $1 million a year. So you can really, as you go to being a full-time trader, you need to make that transition, because now it's not about getting there, you're there. It's about maintaining it. And if you just trade smart over the course of this year, you'll be a millionaire come next year. If you try to have 5-figure green days, you're not going to be much past where you're at right now. You'll be at the same general level, because you're going to be trying for something, trying for money, trying for all this stuff. You're going to have big blowout days that wipe out your months and that yo-yo your P&L. So you have to, and just saying have the discipline isn't like, it's not obviously as simple as that, and I'd love to have you on next week and we can talk back and forth so you don't have to type. It's a hard thing to do, but almost mentally giving up the idea, and you're still going to have, like, I still have $20,000 green days occasionally, but they're not going to be what you're aiming for now. What you're aiming for now is mental stability and consistency, which hopefully is what you were aiming for before. But if you really want that peace, and if you don't want it, or you don't, and you think you're okay, eventually you're going to trade to where you wipe yourself out, and then you're going to want it because you're tired of wiping yourself out and you're tired of that yo-yo. Seriously, just set some type of, like, for instance, $5,000 stop loss on the day, and just respect it for a week. Say, hey, I'm going to try an experiment for a month. I'm just going to do a month-long experiment, because afterwards I can go back if I don't like this. And I'm going to say, hey, it's a month in. I'm going to respect a $5,000 a day loss, and I'm going to do that. I don't care if I don't make enough or whatever it is. I'm just going to trade this way and see what your P&L is at the end of the month. Yeah, it's not as sexy. It might not. Yeah, sure, you can't come back from 15K down like you've done before and like I've done before. But I'm going to trade in a way early that makes it where I'm not coming back from those days, or I'm not doing this, and I'm just, it never bothers me being $1,000, $2,000 down early in the day. I don't even think about it. It's like, whatever. It's like 2 trades. And if I have a $5,000 loss stop on the day, then, I still got a little bit to go. I don't have to trade too safe, but I have to kind of realize where I'm at. And it kind of gives you that little bit of, that little bit of wiggle room to kind of build that cushion early, lean into things. If it's a really good day, you're going to know to keep trading. If it's choppy, hey, you just know to stop and you lock it in. So there's a process to being a full-time day trader, and it's not, things will change for you mentally now that you're doing this. Your highs are going to be higher, and your lows are going to be so much lower. Your lows just tripled, my friend. Your red days, the pain of them when you stop getting your last paychecks, have just tripled. Just so you know. However bad you think you felt before, you're now going to in the future, if you don't put in controls to stop yourself, you're going to feel worse. Just being honest with you. So if you really want that, you have to implement something, and some type of stop loss to stop you from getting that. And that's the only way, because I have red days. Everybody has red days. Until you just get really, really good at controlling and what you're doing and what you're looking for, and your risk management on when you're taking trades and the amount you're taking and all this, which just comes with time and time in front of the mirror. Like you've been doing this for what, a couple of years or a year or two, and now you're just about to start full time. Don't make the rookie mistake of just going in heavy. Like, let's be intelligent. Let's do this smart. Let's go into it. Let's accept we're going to have red days and 5K is not going to hurt you. And, like, are you really going to have 5 back to back, $5,000 red days? Probably not. You're going to fix something before then. But could you easily have one $25,000 red day? Yes. So what's easier to come back from and realize like 1 or 2 days when you get stopped out and you respect that and you're done? Or a $25,000 red day and then another $10,000 red day because you didn't put a stop in place to actually control yourself. So you'll do it by you'll either create these stops by mandate, because you're not going to be trading long if you don't have risk management techniques, whatever they are, or you can do them early and save yourself, and you'll be in a lot better place next year. That's just my opinion, though. Which, take it for, whatever it is. It's very hard to do, though. I seriously respect, like, believe me, I know I hate doing them. I've been doing stop losses because I don't have time to trade all day. So I've been doing daily stop losses of $5,000 and respecting them. And it's just because I don't have time. I just don't have time to sit here and make it back. So it's like I'm going to trade intelligently and small and smart. And my losses have been smaller and my wins have been smaller. I've had some good wins, but generally speaking, and I'm kind of cool with that. But I'm not a limit trader, and once at some point I'll probably stop. But for now, I'm good. It's a smart way to go. Or at minimum, well, you can't size down. So, early on, especially for the first month, it's not a bad idea. After that, like, you could probably be calm. Like, you might be able to relax after a couple of months. But while you're getting into it, protect yourself. Protect yourself early in your trading. And then as you kind of build, your cushion and all that stuff, maybe you can relax that rule a little bit until you start losing or something. But early on, definitely protect yourself. Let me scroll back up. So Chase said he asked about the ATR filter, which we use to determine kind of if a name is good or not. And once ATR goes below a certain amount on the 10 time frame, 10 minutes, like Amazon or Google, excuse me, he's asking if Tesla or Google and Amazon should be above 4 and Tesla should be above 2. And then he asked if he agrees with this idea, or would it be better to look at ATR after 11 a.m. as a threshold. So 2 things. One, yes, those levels are generally the same. I would say generally $3 or so, $3 to $4 is my Amazon and Google range, and I don't trade Tesla when the ATR is under $2 unless it's hitting a major support or resistance level, or it's like super, super compressed and it's one of Kelly's kind of breakout strategy type things. On a moving average or something, I don't trade it if the ATR is below 2. If there's a momentum trade that I'm taking or trying, I do not take momentum trades, Momo trades, or bending trades once the ATR drops in that $2 range. And for Google and Amazon, it's the same. But yeah, that $4 range is about what I'm looking for. If Amazon or Google are not moving $3 to $4 on a ATR of 10 minutes, the last 10 minutes, I generally will leave those names alone too. Unless it's a stochastic. Well, sorry guys, I'm worn out. There are very few exceptions to those rules, Chase. Usually in the middle of the day, unless there's a really high conviction, trend line setup, like breakout, breakdown, overall market news. Like, those are the only exceptions. So generally speaking, if I just sat down at a computer and looked at the ATR, yes, you are correct. What you gave me would be that. And yes, after 11, ATR is a huge indicator. Like, I generally will not trade a name. Because you got to think, if Tesla's only moving $1, you're not going to get like, and you got a $2 spread or a dollar spread or a $1.50 spread in the options, you're not going to be making any money like on the move. And if you don't get good fill or good PI, then you could have a whole move for 2 to 3 minutes and not make any money. So so yes, you need to understand what you're doing. And if you're looking for a C strategy scalp, once those ATRs move below those levels, you just leave them alone. And you just let them be. Like, that's all there is to it. And then I wait, especially after 11. I wouldn't say it's 100%, but I would say especially after 11, you leave them alone. ATR doesn't necessarily matter in the stock strategy. It does, because if the ATR is not moving, you're not going to get a lot of move in the candle. So you still might be able to scalp some. It just depends on where it is. It depends on where the cues are. It depends on these things. But generally speaking, yes, low ATR, I stay away from the stock strategy too. You know, especially if you're just chopping around on the mid range. And you have to know, if you don't have an ATR that's high, you're going to have to hold the name longer. And unless you want to do that, you don't trade it. So it's like, yeah, ATR in Google is like under $1 or $2 or something. So the name is moving $2 a minute, which is nothing for Google. So that basically means it's sitting still. So you're going to have to hold the thing for 5 minutes to make a point or 50 cents, unless you just get really good PI. So you kind of have to take that into account, and you have to look at it and be like, well, the ATR is not really moving. Is this trade worth it? Because if it goes against me, I'm going to lose a point or two. How long am I going to have to hold this thing to make 50 cents to a point or a point or two? So you kind of take those things into account in your trading. So it matters, but it's not part of the strategy. But in the middle of the day, if the market's just going sideways, I'm not taking something every time the stochastic set up. And I think I called a few out today. If you were in there, one or two, I said, I like Google here. And I actually talked through where I was looking to enter. And I called one. And then there was like Russian news that messed it up. And I think I broke even. Somebody else made on it. And so it's like, you can see me call them out. You know, and when I think they're good and not when I'm in there and when I'm talking. But like I said, I might only take 3 of them a day, 5 of them a day or something like that. Yeah, it really will, Peacock. And so here's something I want to throw out there. There are some people here that are not in the Newsbeat live room. So what I'm saying may or may not pertain. But Geronimo's trading style and range trading. Trading measured moves. Trading stuff like that, y'all do know that's different than C strategy trading, right? Like, throw an 11 up in chat, you know, in the comments or in Discord, like throw it an 11 out. Y'all do know that's different, right? What you're doing is different. How you trade it is different. Like, even the stochastic plays, y'all are throwing them out in Discord, yep, and in YouTube. Like, it's different, right? You can't trade it the same. You can't trade it with the same size. You can't trade it with the same strategy. Like, you have to look at those trades differently. You cannot mix C strategies into the middle of a measured move that has no volume. So if you have this measured move that has no volume, you can't just randomly be like, oh, well, Geronimo or Gator says this is going to this level. I'm going to jump in now and it's going to get there. Yeah, I might be 2 points up on the trade and have sold half my contracts. And I'm sitting there not caring if I'm right or wrong about the back half of this. And it does pay, like Peacock said, but it's definitely not the same. And it might not even pay as much because the risk in what you put into it is less. So you really have to learn how to trade those, and you have to get acclimated to trading them. So if you're doing these trades in the middle of the day and you're kind of and you're looking to do them and you're trying to learn how to play them, please understand that there's a reason Mark didn't do them. And Mark's not on the show right now, but there's a reason they are not part of the simple, easy, effective strategies. They're not easy, and they're not as simple. They're harder to spot. They're harder to identify. They are more risky. They require these longer hold times. And the hold time might only be 5 or 10 minutes, but they require more of this chop. They require sometimes for you to hold a losing trade for a few, or to be red in something for a little bit. Sometimes for it to work. Yeah, and yeah, Peacock, you're saying it's like JR is not taking, I don't know, he could be taking $1 million or, 100 contracts, but he's not trying to hit home runs on every measured move. He's taking a lot of base hits. So a lot of people are doing these, and I say a lot, it might just be a few people, but some people are trying to do these things and hit home runs on measured moves. Y'all do know that's like super hard to hit home runs on these moves. And then you get all this FOMO because you're looking back after you sold for a loss. And here's what happens, and here's why I think they're toxic. Here's why I think, one, they're good to do and good to learn. So cheers and learn them. They're not bad, but they're toxic. But they can lead to toxicity. Why do they, or can they lead to toxicity? And then, Scott, I'll answer your question. They allow you to actually be read in a trade sometimes and want to hold stuff too long, or to be like, I sold too early there and I could have held, and now the contracts are 10 points up, or I didn't trust this move, and so I want, instead of selling 50%, I'm holding 100%, and now I'm red. Well, it's going to go back because the move says it is. Like, there's so many different things that can really mess with you when you're trying to trade these strategies. So it is a different style of trading than C strategies. And you need to take the time to actually understand them and to learn how to trade them with little to no toxicity. Don't just jump in and play armchair quarterback looking back at what you could have done and get mad or happy that you did or you didn't play something. It's not worth it. You really have to be completely able to take almost while you're learning it, and maybe that's why you should just do a one contract thing or something like that. You need to be able to take almost like 100% loss in it. Not that you would ever technically do that, but with the size, just to where it's like you can take it, you can watch the move, you can let it play out, you can learn to trust it. Like, I do really good in C strategies because I trust them so much and I can take them. Until I learn to trust other moves and see them and know why I'm entering and why I'm holding and when I'm selling and why I'm selling at these levels and all this other stuff, it's not something I can do well. So it's super important that as you're trying it, you actually do it small and you do it safely and you do it in a way that won't cause toxicity. Because if you're just coming in and you're like, dang, this market is hard. Well, Geronimo's doing really good and Eddie's doing, or CT or whoever it is doing really good. And then you get into it and you're just trying to hit home runs because everybody else is just trying to hit home runs. Like, you're going to get wrecked. You really have to be careful and cautious and patient and learn it by doing it small in a way that you're not going to cause toxicity, and you're going to train good habits in trading these strategies. Because we've said it before, there's a million different ways to skin a cat. There's a million different ways to make money in this market. but not all of them are equal when it comes to on the mind and how you trade them. So if you've been a scalper and you're into the scalping and now you're having a hard time and you're seeing other people come in and you're like, hey, I'm going to do this. Okay, he says he's in here, I'm in here. And then it chops around for like 5 minutes or 3 minutes. And then at one point you were green 20 cents or 30 cents. And now you're red 20 cents. And you're like, okay, I'm out. And then you're out. And then it goes in your favor. And the move is halfway done. And then he's like, yeah, I'm still in this, waiting for this retest of this low. And then you're like, okay, I'm going to get back in. And then you get back in, and then it goes 50 cents against you. And now you're like, and you don't know what to do. That's the danger in doing stuff like that, in trading those type of strategies. There's a reason as scalpers we get in stuff and we chuck stuff. And we're in really quick and we're out really quick. And I'm not saying it's a better way to trade than another way. It might be, it might not be, but know the difference and the different mindset and the different, it takes different types of, excuse me, it takes a different type of thinking to actually be able to trade that way and to view things that way. So really take time to learn it and to trade it intelligently if you're going to do that. And I'm trying to do it. And I'm taking my own advice. And that's why I'm giving you guys the advice. And I'm not saying these things just because it's like random, like whatever. Like there's legitimate danger to doing this. And you need to be careful as you're learning the strategies. And don't risk your account on learning the strategies. Let's see, did somebody ask something? And or your mental sanity. I have not, Scott, on E-Trade. I'm in the middle of closing on a house. I have to use my trading income as like tax stuff, so transferring money in between different accounts like massively is an issue. So I haven't moved money over to E-Trade right now. I'm waiting to do that. I will probably do it. I've heard that E-Trade is similar to Fidelity. I've heard some good and bad things about it with like platform issues and stuff like that. You can trade same day options, which is nice. So I've heard some good things about, same day expiring options in E-Trade, but I generally am going to stick to Fidelity, Scott. They gave me an under 20 cent or 20 cent per option contract. So I'm very familiar with the platform. I don't actually have issues with them. So I'm going to stick with Fidelity in the long term. Yeah, you can't front run DKT, Geronimo strategies, or these. You have to let the strategies happen. It's pretty much the same, generally speaking. Chase is, what Kelly does. This kind of stuff. Sorry, just reading comments. This light's like super close to my face. Should I get a lighting ring, guys? Like one of those circle rings that look weird. Let's see. Yep, that's true, Blademan. That is easier to read with the momentum and grinding, you can get stuck. Again, generally speaking, I really prefer C strategies. I size down when I trade these mid things. I do okay in them, but it's just because I'm like super small size. And if I'm trading them, I'm not looking for like 50, 100 contracts necessarily. Like if you're catching a point, 20, 30 cent move, you can take 10 contracts and make $300 or something like that and just be happy. So I'm just sizing massively down in names like the Qs and stuff when I trade them so I can get good at them. And if you can't make $300, here's the thing. If you can't trade a name and make $300, what makes you think you're going to be able to trade it and make $3,000? How about you prove to yourself that you can just trade intelligently and make $2,000, $3,000, or sorry, $200-$300 trading a name before you sit down and you try to trade and make $2,000 to $3,000 or $20,000 or whatever it is, trying to catch these point long moves. Because yeah, if you can perfectly time Q's moves, you can buy 100 contracts. They're fairly cheap and you can ride it out. But let me tell you, if you can't trade that right, but if you can get it down and you can trade, 10 contracts, and a name that only moves 10, 20 cents at a time. And if you can learn to do that, and then over time size up from 10 contracts to 20 contracts to 30 contracts over the course of 6 months, you think about that long-term game, you could be in a pretty good place. You could be in a pretty good place a year from now. If you can learn to trust the strategies to a point to where you can take 100 contracts in a Q's range move and hold it and catch a point or two, that's 10, 20,000 right there, you know, if you can catch a point or two in some of those moves. But you have to learn how to trade it and really get confident and comfortable with trading the name and the move and what you're looking at. And you really should start off slow and consistent, and you shouldn't come into it trying to smack it. You should learn to make $1 and then learn to make $2 and then learn to make 10 and then learn to make 100 and then learn to make 200, and you grow it. You don't just come in trying to smack the crap out of range moves. It's a different type of play than the C strategy, and you have to learn how to play them if you want to make money in them, in my opinion. And I'd love to have Geronimo on again and talk about some of the more. And yeah, measured moves would be good with common stock. Yeah, Blademan, you do need to take profits along the way. And yeah, it's true. Just take it and take stuff. I'm not sure where Boof is at today. Oh, that's where he is then, Peacock. Yeah, I know he was talking earlier today. E-Trade issues wrecked his month, and it's the middle of the month, so another reason I'm not a huge fan of the E-Trade, you know, with what he was saying, with everything with it, and I don't know what issues he had. I meant to reach out to him, but, you know, I will over the weekend. He's been trading really good this month, and then, you know, E-Trade platform issues wrecked his month. So, lost it all just because of crap today. So I'm sure he's off and chilling. Tough, you know. There's a reason I stick with Fidelity. I have never had an issue with Fidelity that has caused anything like that, ever. And guys have talked about with Schwab and with E-Trade having those issues. There's a reason I haven't moved platforms when other people have moved platforms. Stability means a lot to me. So there's a reason I'm still only trading Fidelity right now, as far as for my day trading scalping account. So for your general question, Chase, you could. It just depends on what you're trading and what's happening. Remember, there's a delay in ATR, so if you get a market move, you know, and stuff's picking up, you're generally going to trade. You know, Chase is asking if you should kind of create levels off of, you know, the morning moves, and then only play a name when the ATR catches back up there. I mean, yeah, but it's rare and almost never that a name is going to get back up to that level. That just kind of lets you know, to me, early on when the move is dying off using the ATR. So it's like the ATR is starting to go down. You realize maybe at 10:30, hey, ATR is dying down. I can't expect to make the same amount in these moves. This name's not going to move as much. I need to take the points quicker. I'm losing in this name. Why am I losing in this name? Oh, the ATR is down 2 points from where it was before. Okay, I need to take my profits quicker because I'm not going to get a 3, 4, 5 point move in the name. I'm going to get a $2 or $3 move in the name. Okay. So it's that warning. It's that, like, I see that things are slowing down. Because when you're just looking at a chart, like, you know, it's hard to kind of see when you see these little, like, oh, here's the bar, here's the bar, here's the bar. You know, you don't have an accurate, like, you don't have an accurate idea of everything. And then all of a sudden, you see things going down in the ATR. It gives you a better idea of the price action and what's happening. with the price action. So that's why I use the ATR. If I'm trading later in the day and I'm trading a measured move, I might not be using the ATR because I have a measured move. I'm trading to a certain level. I'm trading off of the cues. I'm only looking for a 10-20 cent bounce or something. So it just depends. If you're trading a C strategy and there's a $1 ATR on Tesla, you might just want to leave the stupid thing alone because you might not get the pop that you want. So you really want to be cautious when you're using it. Or it's just more of that warning sign. It's not saying you can never trade a name with a low ATR, or one that's lower than before. It's just know that you need to trade it differently than when you're bending. So you don't need to actually bend into things. So I generally, use it with stuff like that. Can I expand? That's what I'm doing. IQ, does my expansion there answer? Like ATR is basically the average. ATR is basically the average price of a name and the movement in the last time frame. We use a 10-minute time frame. The default's 14 minutes, but whatever it is, it's just the average over the last 10 minutes is what we're talking about. So the average price movement per minute on the last 10 minutes. So the ATR in Tesla is $4. It's super easy to catch breakouts in money because the stock's moving $4 at a time. The ATR is $1. That means over the last 10 minutes, Tesla per 1 minute has only moved $1. So if it's the average candlestick size over a time frame is basically what it is for what Peacock said. So it is a truly amazing tool to let you know when a name is dying down. So and today when Tesla bottomed out and started getting choppy, the ATR went from $3.50, $4 down to under $2. You take a few front run losses and then all of a sudden you look at the ATR and it's oh wait, it's dropping dramatically. Oh, okay, I'm going to leave this alone. It's just that really quick warning sign. And it's that middle of the day warning sign. You sit down, you're I'm going to slam Tesla. It's going to make me money. It's setting up on this. It's moving 80 cents a candle. If you're zoomed in really quick on a 1 minute chart, it might look like a big candle, but it's not. It's a $1 candle or $2 candle. So yeah, I thought about that, messing with the time frames and going to a 5-minute ATR as opposed to a 10-minute to even see a quicker one to see what it's doing on the super quick time frames. So I might try that next week too. I don't use Lightspeed, know something. So I don't swing crypto gambles. We have some swing strategy stuff, look for a name with 8 red bars in a row on the daily. Take something off the 200 when you get a hammer bar. Wait for a higher pivot low in a range. So if you're watching a name and it drops down, it goes back up a little bit, it hits a moving average a 200 on the daily, EMA or SMA, and then pops up and then comes down and then bounces off of that next one, and you get a green bar that takes out a red bar. That could be a signal for a long. I'm not a swing trader. I don't swing trade at all. I'm in no long positions right now. I'm in no short positions. I'm a completely, entirely scalper. That's the only thing I do. There are some swing trades I call out. It's very rare. And I will call them out when I'm doing them. But I'm not doing any right now, and it's not something that is very common with me. So I don't see the need for it. If I can log on and make $2,000 to $5,000 every single day scalping, I really don't see the point in trying to swing trade names. I'm not saying it's not good. I'm not saying you can't do it if it's part of your strategy and it attaches on. Just at this point in my career, it's not something I want to do or anything else. And hello, probably Russian bots that are in my chat. I appreciate you. So but yeah, if you're trading C strategies solely, ATR is extremely important. If you're trading range moves, it's not as important. Because if you're trading a range move or a measured move or leveled moves, you're like, you already know what the like dollar figure is and the target that you're trying to reach. So it doesn't matter if it takes me 20 minutes to get there or 5 minutes to get there. I'm trading until it gets to this level. It's bouncing off this level. It's going to go to that level. It might take 20 minutes. It might take 3 minutes. It might take 8 minutes. A C strategy, you're instantly right or instantly wrong. So your ATR is important. Your average, the average price of the candles, but nothing else. I do not. Are Fibonacci levels? No, I do not at this moment. I might use them for entries, like if a name makes a big move and then retraces 50% on a Fibonacci, I might use it for an entry on the next 2-minute bar, like use a 2-minute time frame. You get a 50% retracement, and then it hits the 50% level, and you get the next green takes red on the 2-minute, meaning a green bar takes out a red bar on the 2-minute. I might take that, but generally speaking, for measured moves, no, I don't use it. Crypto, in my Discord, or not my Discord, but our Discord, drop a comment as soon as the video posts. Well, let me see if I can post it now. Let's see if I can post a link to this Discord for you homeboys. Invite people, copy, and I'm not signed in the chat. Oops. So I'm not signed. I'm on a different computer than what I'm normally on. So drop a comment in the video as soon as I'm done with the video, and I will post a link to our Discord. And if you're watching this, you can join the Discord and trade with us in the mornings. Dude, same thing. People are like, oh man, market's going down. You must be having a hard time. I'm like, no, I wish it would go down harder. Like I'm like, stupid things holding up, and it's like, won't just dump. I wanted to dump 1,000 points. And people are like, huh? I'm like, yeah, I wish Tesla would go to like $50. I would be so happy if Tesla just dumped. It's like, yeah, it's like, market sucked today. I'm like, I don't know. I made 5 grand. I'm good. I'm doing the same thing, Peacock. It's just hilarious. It's like, why would I be hurting? Like, I don't know, things are going down. It's like, yeah, I'm shorting them. It's a good thing about being a scalper, man. So, show any other questions before I call it? I don't mind hanging out, guys. Like, if you guys want to chill and hang out, I'm down to kind of hang out. But it's about 11:30 Eastern, 11:40 Eastern time. I just want to hang out with you guys for a little bit before calling it, but I don't have anything. If you don't have anything, so let me see if there's any final questions that kind of, yeah, I got to get some rest. I've got to finish moving. I've got a couch, china cabinet, furniture to move tomorrow. Finish picking up the house. I've got kitchen remodel people coming in that are redoing the tile in my kitchen on Monday, Tuesday, Wednesday. We'll see how that goes with kids sleeping in the house. Like, it's going to be a long week next week for me. I am golfing on Monday, though, and probably on the next day of the week that's, like, not raining. So that'll be nice. But, yeah, other than that, it's going to be a long week next week, and I need my sleep. So it's not, Sufyan. You need 2 years. So you need 2 years of income. The easiest way to get a loan too, or an easy way, is if you've been doing this for a little bit, do the whole LLC route. But it's really not hard to get a loan as long as you have 2 years of income. Because if you have 2 years of income, you're basically like a real estate person, like they're contractors, you're like anybody else. So you'll need 2 years of your income showing you that you're a good trader, and then you'll actually need probably some cash in your account. So they look at it and like, okay, you've been trading. Oh, you have cash, so you're not about, to be wrecked or anything. And as long as you keep stuff like that, you're going to be fine. It wasn't hard at all for me to get a loan. The hard part is just like I'm stuff I'm not going to talk about on here, but time frames and stuff like that with selling and moving and taxes and closings and all this other stuff. The loan itself, like they looked at my numbers and they're like, yeah, you're good. Yeah, we got you. You know, it was just like, how do we? It was more just like documenting everything. You know, how do we put this here? How do we do this? You know, those a few issues, but you know, it's not difficult to get a loan as long as you have 2 years of income of trading. You'll be just fine. Then you better have the cash to pay it. So you just need 2 years of income. Like you need 2 years of the same of trading income in order to get a loan. Like you can't get a loan. Now, you can pay for something in cash and it doesn't matter. But if you want to pay, um, if you want a loan, you have to have 2 years of income. And any realtor is going to make you do that for income that you make yourself. That's like self-employment income. You have to have 2 years of it. It's the same for real estate brokers, for people who own their own businesses, for people that do all this other kind of stuff. If you own your own business, if you pay yourself, if all this other stuff, you have to actually, have 2 years of income. Otherwise, you're not getting your loan. Yep. Unless you find, I don't know, maybe somebody will give you a cash loan, but you know, but reach out to, yeah, Jason does stuff like that. He can definitely give you some more stuff, information on it. But that's common. I always take profits quick, Chase. Chase is asking about Google Strat. I always take profits quick. Unless there's a major trend or like just super momentum in a name. Like I always take profits quick. I mean, if it's a choppy day, I'm taking profits quick. You know, generally it's like if I take a name and it pops up, like I'm selling most of my contracts, especially on choppy days. If it's like super trending and it's just ripping, I might let it run some if I'm green on the day. Let's say I'm green, for instance, 5K. Yeah, I know. I know. That's what I'm talking about, Chase. Like I always take profits quick. Like even in that, like if I buy and it sits still and then it pops up and I'm up just in the bid 50 cents or 20 cents or even flat, I'm going to sell half and lock in a point, and then I'm going to hold the other five. Like if I was taking 10 as an example. If I was taking two, I'd just sell one. Um, like I always sell half. Generally speaking, like 90% of the time, um, I I sell Google like half of it right away. Like I pop, it gets green on that first 2 minute bar. I sell, half of it, and then I hold the other half for the other 2 minute bar or whatever it is. It's just easier. The market's super trendy, Chase, and it's just ripping in one direction and it's just going to go up forever, then yeah, I'm just going to buy it and I'm going to hold it and let it run. But if you're in a chop zone like we've been for this month, like I'm not holding anything. I'm just taking the money. Yes, that is correct, Rebecca. Not the same income, the same type of income. So it's like I'm a day trader. So it's like I need 2 years of investment income. I'm a real estate investor or real estate like broke whatever. I'm a realtor. I need 2 years of being a realtor to claim that income. Now, if you go work for a company like, I don't know, Shamuckatelli's company somewhere, and you go work for that company, and that company pays you, that's different. You can get a loan right away based off of what your stuff is. But if you are a self-employed person, then you need 2 years of that type of income. They're going to take your last 2 years. So it doesn't matter the amount. It's not like, oh, I made 50,000 in this year and 50,000 in that the next year, or 100,000 or 500,000. You need a certain amount if you're going to get a loan. 2 years in the same job or job field if you're paying yourself. But talk to a real estate person, or talk to a real estate person. Talk to a banker. I'm not a banker. You don't need 2 years of LLC income. I don't have 2 years of LLC income. It works. You don't need 2 years of LLC income. I don't have it. I only have like half a year of LLC income, or 3/4 of a year. LLC makes it easier sometimes for them just because of how it's set up. But what they'll do is they'll link like last year it was personal and this year it's LLC. So they'll just show like, yeah, he just took his income from when he was an investor and then he incorporated and now he's paying himself for whatever it is. You're going to be just fine, dude. Like that doesn't matter at all. All they're going to see is that you're a trader, and there might be some semantical paperwork on their end, and you'll just have to send them your W-2 from your company, and then you'll have to send your K-1, I think it is, and your tax returns for your business, and then your tax returns for your, because what they have to see, like if you have a LLC and you paid yourself, but you didn't make any money in your LLC, but you made money because you paid yourself off of last year's assets and stuff, talk to a broker, talk to somebody who's not me. I could tell you what the right answer is technically from talking to my person. I'm not a broker, mortgage broker, so go talk to a mortgage broker. But you're going to be just fine if you have 2 years of taxable trading income, whether it's from an LLC or yourself. You're just fine. Like no joke, you're just fine. I got a mortgage for a lot of money very recently, and I'm in the process of all this right now. So believe me, yeah, you can get your mortgage. You're just fine. So don't worry about that. Well, guys, it's been about an hour and 11 minutes of you just listening to me rant. Yeah, that's true. Thanks, 4C. I'm done, man. So I appreciate you guys hanging out. I will try to get some more content on next week. Probably no show on Monday because there's no market on Monday. If I do a show, maybe I'll get somebody to come on and host. Maybe I'll do another interview show on Monday. So, yeah, I'll do maybe an interview show if I can. If not, then I'm not going to. But yeah, thanks for hanging out, guys. I appreciate it. I hope you had a good week. If you had a rough week, message me. Be glad to talk to you about it. Trade smart, trade intelligent. Long-term game, guys. Base hits, add them up. Let this year be a good year, your best year trading. I appreciate it. It was a rough week. It was a long week. There were good setups, but it definitely wasn't easy. So yeah, I can't either. That'll be a good one, man. I'll see what I can swing. You guys are the best. Love you all. Have a great weekend. Take some time away. Long weekend. I'm going golfing on Monday. Do something you love. Spend time with family. Don't worry about the markets. I promise you they'll be here on Tuesday. Deuces. Get some